Welcome to our live analysis like every Wednesday, mid of the week. And you might already know how important how key it was so far the week. We have earnings providing a solid, provide some solid gains in the stock market. It was the mixed data providing a bit of a muted growth signals from three of the key economies in the world: United States, UK, Europe as well. So, but anyway, it's an earnings season once again, and what the results will be from this earnings season. So far they have been positive, but whether this will prevail for all the sectors or not, or whether, or very importantly for us to see whether the tightening has indeed hurt the corporate sector is very, very crucial. But as I said, it's a matter of data as well. We say the central banks remain the main driver of the market along with earnings. So the data that we have seen the last few weeks, okay, they are providing a very blurry, very murky, I would say, inflation picture. Mixed economic data basically, okay. So yeah, data along with any comments from the central banks remain key, and that you can see that because we have seen a lot of FOMO trading this week. So allow me a second to double check that everything runs smoothly. You can hear me, you can see you can see my screen as well. Let me just double check. So a quick reminder that this is your session, this is your time. Ask me anything you want. Also, I'm referring to the guys in the GoToWebinar that have joined our live via GoToWebinar. Guys, this is your session. Ask me anything you want, okay? I will be more than happy to help you out with anything you need. In the meantime, let me send you the YouTube link as well. Perfect. Perfect. So far, so good. Okay. Just a second. Okay, welcome from Philippines. Thank you, Saddam. Thank you. Come in. Dominic, welcome. Okay, there are some Arabic comments over here. To be honest, I don't speak Arabic, so I'm really sorry for that. I'm really, really sorry for that. So just very, very quick. Come on, come on, come on. Okay, we are ready to start. Okay, perfect. So very briefly, I would like, basically, let's start with the dollar, okay? Let's start with the dollar, the data from yesterday and so far today. Before we move on to the stock market, even though equity market in general, stock market has been in a great rally so far, okay? But let's start with the dollar index. Is the dominant the dominant currency, and we finally have seen some kind of a rebound, not a significant one, but I would like to explain a bit what's going on so far this week. I mentioned the word FOMO, okay? FOMO. What I mean, guys, by FOMO? FOMO, it refers to the abbreviation of fear of missing out, okay? This is what we have seen so far this week. FOMO trading, okay? FOMO trading, what I mean by that? we are referring to the trader's experience, okay, to missing out any big opportunity or it's the fear that traders get in when they think they might be missing out missing out an opportunity, as I said. And this is something that we have seen happening several times this week, so far this week. Welcome from Nigeria. Welcome, Sheba. Everything is on the website. Please have a look. www.hfm.com. Okay. I cannot right now. I cannot really because it's a zero spread account. How much commission is charged? Because I'm not sure. Okay, I cannot remember. Can you please check on the website? Or if you want anything precise, anything, I mean, targeting or part to find out the commissions for other than the zero spread account for particular assets, maybe, can you please, we have a live chat and support will be able to assist you on spot. Okay, welcome, John. Welcome, everyone. So as I was saying, a lot of FOMO trading we have seen today this week, and this provided some extra boost, some extra momentum, particular to the stock market after the better than expected earnings that we had so far, and something like it's a continuation from last week as well. Last week we had big banks. We still have seen big banks beating expectations, and the fear of missing out have also boosted further and provided some extra support, some extra floor into the market. So there is a lot of confidence. Okay, confidence. This is the key. Earnings, data, some of the data at least partially, and the comments from central bankers, but mainly some positive positive data have helped the market participants more precisely to gain more confidence that the central banks will complete their tightening circle soon, so that the next meetings will announce the very last rate hike. And this is key. Why I'm saying this is key? Because next week we have FOMC meeting, we have ECB and Bank of Japan. That's why we have seen this extensive support. Okay, is ahead of next week FOMC, ECB and Bank of Japan, but mainly FOMC and ECB monetary policy meetings, which are expecting for both to be the very last rate hike. ECB still the picture is a bit blurry, okay, but what's expected, especially after the pretty dovish comments that we have seen this week from ECB officials such as not, next week we're expecting to see rate hikes from ECB as well, but with a more dovish tone. Okay, so I'm not getting any questions. Sending my love as well, Kylan. Welcome everyone. So yes, you're right. I have to come to the point. You're absolutely right. Said, I'll come to the point, but you haven't asked me anything, I'm afraid. Come on. Let me know what you want, how you want me to assist. Okay. So summary. Um, yeah, we spoke about FOMO trading. We spoke about earnings. We spoke about this extra momentum. We spoke about the fact that the markets are right now suggesting that the next week will be the very last rate hike from FOMC and ECB. But I haven't really explained what happened yesterday with the data, and more precisely the data out of US. So I'm referring to the US retail sales and the industrial production, but mainly it was the headline retail sales gains that we have seen yesterday and the slump in the industrial production. Okay, that was key. The retail sales were very, very well anticipated. Just to give more clarity to the U.S. economy growth, but instead we have seen that the U.S. retail sales indeed they provide some rise in June, both in the headlines and excluding autos. Something that pretty much boosted further the good or positive the rise, let's say, that we have seen from US retail sales. With the slump, the drop that we have seen from industrial production is what I called mixed data. Okay, so that's why we have seen treasury yields initially slipping further on the deadline on the data announcement, and that's why we have seen actually the belief that the FOMC will be done with the rate hike next week to increase. Okay, so now I'm not sure. I haven't checked this morning what was the latest odds for next week and for September as well. But still, you can see it from your chart that the market remain priced for a 25-point hike next week. However, so this is presented to be the last one. So, okay, dollar 99.10, 99 somewhere 99.20 to be more precise was the bottom. Sorry, the bottom of the the week so far, and that was a bottom that we haven't really seen since March last year. Okay, and just to zoom in a bit on my let me just have this is the daily chart, weekly chart. Sorry, my bad. Weekly chart, guys. I want to clear a bit this just for you to see that it found still supported above the 99 territory, the round 99 territory. I'll put it in green. Yellow. Okay. 99. Here we go. So still 99 provides support for a second week in a row for our dollar. However, the selling that we have seen in June and July has been so far a bit dramatic, but it had been key that it managed to break the year's support. So 99 remains a key support level for the asset, especially because it has failed so far to extend above 100 and to hold above 100. Okay, so I will present gold in a bit, guys. Okay. Okay, I cannot clearly say whether dovish means sell or if sentiment, but theoretically, yes, that should be the case, because remember that markets are ahead of themselves. So if on a dovish tone, the futures will start pricing in the not only the pause, okay, the pause is the pause of the tightening will be clear if the markets, if the central bank state that, you know, um, uh, we might hold for a bit or something. If they announce a dovish tone, if they I'm trying to remember what Mr. Not mentioned. However, I think he clearly stated that he clearly suggested that there are no further hikes from the um, yeah, he said that the ECB is at its peak rates. I don't remember the precise comment, okay, but I think he said that the ECB is nearly to its peak rate. So this is dovish. Why? Because it's like he's saying that we are nearly to the end. So theoretically, and what the history tells us is that because markets are also ahead of themselves, they might start, if they haven't done it already, they have it already actually, they have done it already. As you can see, the discount that we have seen in dollar is the market shifting and already started pricing in the pause or even the cut of interest rate hikes, even though this is something that is not expected until the year end or even the year ahead. Okay, so markets are ahead of themselves, guys. That's why we have also seen this shift lower as well. Okay, this is a combination 1, 2, 3, 4, 5, 6 for 6 days in a row. Okay, last week we have seen a dramatic selling. That also might be some pressure on the dollar, so boosting dollar lower ahead of the rate hike next week. So in order to potentially something that could potentially attract some buying the dip trading, but so far we cannot really tell from a technical perspective at least. But yes, my dear friends, historically, theoretically, a dovish tone, okay, tends to add pressure, okay, pressure on the country's currency. Remember the theory: the lower the rates, okay, the cheaper the country's currency gets. Okay. Thank you, Job. Thank you very much. I will have a look on pound, euro, dollar, and gold. Don't worry about it, guys. I want to cover the dollar because anyways, it's related to all the things that you just mentioned, and its dollar index is the dominant currency anyway. So what I wanted to tell about that, this week it has found some support, as you can see, and holds that 99 territory as a key support level. However, the fact that it fails to extend above 100 or even hold above 100 is something that adds to the bearish outlook, fundamentally and technically, for dollar. Okay, markets already priced in the pause of tightening, the potential rate cuts. Okay, that's why we have seen this selling, especially due to the data. So consecutive data that they will add more odds of a pausing in a sooner than expected cut of interest rates could add further pressure on the dollar index. Okay, now what else? Yeah, so let me double check whether you can see my screen. Whether you can see the indicators as well. Yes, you can. So look at that. other than the multi-month bottom, multi-month break back to March 2022 area. Other than the fact that it fails to extend above 100, look at MACD over here. Look at MACD over here. Extending further to the downside, regardless this support that we have seen the last 4 days, regardless of this limited rebound that we have seen so far today. Same stands for RSI. There is some improvement, but is still flirting with the oversold territory and the 30 barrier, okay? Is well below 50, okay? With MACD extending lower. The actual handlebars provided some rebound, but it looks like a correction, okay? A technical correction. So overall, dollar remains under pressure ahead of the upcoming week and the important FOMC meeting. But okay, so for anyone that is interested in a medium-term analysis, key is a closure, a confirmed closure, okay, daily candle closing above 100, but more precisely, in order the outlook to change, which is something that it looks unlikely for the time being, we need to see the asset getting back above 175 territory. Other than the 38.2 Fibonacci level on this latest leg, is also a level that has provided support for how many months? Nearly a year, okay? So it used to be a support, and now it has turned into a key immediate resistance for dollar index, 175. A move and a closure above it could signal that something is changing, sentiment might change, and etc. But considering the fundamentals, the data, the encouragement of what's going on with everything that I have explained about the Fed, and even the technicals, this looks unlikely. Okay, keep an eye also it's also on the moving average, something that I haven't really mentioned. Look at that. The selling is something that it had been seen and it had been signal, hinted, whatever, from the bearish cross between the 20 and the 50-day moving average since the beginning of July. That was a trigger point. That was the very, very first sign that we had that dollar is entering a bearish market once again. And you can see that 20 is keep moving. It is keep moving well below 50. The gap is expanding, indicating that there is an excessive that sellers are in control, and so on and so forth. So intraday, I put the daily chart, the intraday chart on for scalpers. So it broke the high of the day, the retesting actually the high of the day, extended above the first resistance of the day. Now it's just a breath below 100, to be honest. But okay, let me see. Moving averages are keep pointing a bit higher, so it seems that there is still some room to the upside for dollar over here. Yes, yes, Christopher. Yes, indeed, MACD and the gap between 20 and 50-day moving average are showing that bears are still in control. Fundamentals, as I said, and the technicals, they still point that bears are in control. That's why I mentioned that the only indication that we could have that something is changing is if and only if we see the asset extending and holding above 100.75. Okay, the rebound that we have seen today, it looks a bit of it looks more that of a correction on the oversold dollar rather than anything else for the time being. Now, yes, I absolutely agree with everything that you said, Christopher. You're right. Okay. Now this is what I'm showing right now is the 1 hour chart, guys. Okay, which remains positive. Okay, indicating that there is still some room to the upside, even though this looks limited. So what I mean by that, we are referring to that it might continue, but overall, as we already covered and already stated, overall, as long as it doesn't manage to extend and hold over above 100 and more precisely 175, the overall outlook remains bearish. Intraday now in this 1 hour chart, well, since that there is still support for dollar. So let me just, okay. That might be also on the ahead of the, it is still the aftermath of retail sales yesterday and maybe ahead of the building permits and houses starts today. So we have seen some support in dollar index managing to back up a bit. Okay, and there is still, as I said, some support. You can see another bullish cross in our short-term stochastic. This is the bullish support that I'm referring to. You can see that stochastic is still pointing upwards. MACD is still still increasing. RSI is still pointing upwards. So all these, along with the moving average in the 1 hour chart, suggest that there is still for the day some further area to the upside. So the next resistance is just around 10 pips higher. So 108, 107. So this is the second resistance of the day. So as we can see by zooming, you can see that the last candle was a nearly full 41. So there is some extent, some support still indicating that there is some further room to the upside for dollar with the next resistance area at 108. So yeah, as long as we don't see a flip downside to RSI or to stochastic or any flattening of our moving average intraday, all these suggest that there is further support intraday for the short term, for the next few minutes or even hours. Okay, so hopefully I cover in depth dollar. You're right about seasonal tendency, job. You are right about that, but okay, we consider. I cannot really tell. Okay, yet at least yet. Obviously, the bankers and the earnings have provided, and the data have provided a lot of barriers on both sides, up or low barriers to the dollar index. But on the lack of meeting on August, central bankers are on holidays and etc. Yes, we might see the dollar, if not bullish, at least sideways. But still, we have another 2 weeks until August. It's the earnings season. Once the big companies are over, we cannot really tell. I mean, let's wait to see how that July's candle will close. But yes, job, very good comment. Good for everyone to know, guys, that the history shows us that there is a kind of seasonality in August, exactly because central bankers are on holidays. We don't have a lot of data releases. People also are going for holidays as well. So there is a bit of a detected volume as well. So yes, dollar tend to be well supported in August. So let's wait and see. A webinar should be good about August. I didn't consider it this for August webinars. Yes, but yeah, good point. Good point. Let me see. Okay. I'm trying to find out because Job is right in regards to a bullish tendency in August, but uh, I'm trying to find the results. Don't have it in front of me. I will find out and post it maybe in Twitter later on. What's the tendency for dollar in August, but in a bearish year? Okay, because we have these deviations, right? So what's the tendency for August for dollar once the whole year had been negative? That's key. I will find the percentages and the survey, the research that was about seasonality, and I will try to post it in Twitter. Okay, guys? So, okay, let's go to gold. I've lost many questions over here. I need to go from the beginning. Yeah, gold. I'm really sorry for the delay. Shane, hopefully you're still here. Another key driver this week, and actually in July in general. This is the weekly chart. The reason that I'm putting that on is just to show you this rejection for a second time of the 50-week moving average, right? Down, retested, rebounded, so 3 weeks to the upside, broken and extended above the 20-week moving average so far, recover more than 40% if I'm not mistaken. Let me just double check. Yeah, actually recover more than 40% of the losses that we have seen since April, on this April to June down leg, retested also the mid of this down leg. So a really impressive rally from gold the last 3 weeks. But key is this higher bottom, higher low that we got exactly on the 50-week moving average. If I'm not mistaken, this exponential one, yes, is my exponential moving average, as you can see, and it was for a second time in a row, the asset found the floor at 50-week moving exponential moving average and rebounded. That was something that we have seen also at the beginning of the year in February 2023. So rebounded. Okay, guys, slow. I will reply one by one the questions. Okay. Okay. So. I'm lost. what I wanted to say. Okay, yes, gold. Gold retested the 1990, 1984 territory. Again, remember the reign in tightening expectations, right? Which indicated to a weak dollar, okay, in combination with a rally in bonds, okay, is uh, is providing this support to the gold, to the precious metal. So remember that the gold has been, let me just zoom out in the daily chart so you can see what I'm referring to. The gold has been seen, especially in the second quarter of the year, to the downside. It tested the 1990 territory. However, it found again some support, some confidence due to the confidence about inflation. Is something that gave a boost on the gold because of the dollar weakness, mainly. Yes. So 1986 was the peak of the week, and also the mid of, look at that, is the mid of the down leg seen on the second quarter of the year. It's a double fractal as well. Can you see that? Double fractal. Okay. Indicating that this is a key resistance area, a pretty strong one. However, momentum is on the side of gold. So anyway, it's all about central banks. It's all about rates. So the lower, the more the dollar struggles, the higher the gold could get. Okay, so this is the highest that it has been. And it has been since May. Okay, since May 2023, and there is further steam to the upside on gold, even in technical perspective and fundamental perspective as well. Why I'm saying like something like that? Let me just allow me. Okay. Allow me to remind you of something that we have seen the previous weeks. Previous week, I pointed out several times to you this descending triangle in which the goal had been from the beginning of May up to the end of June. But we had a massive break last week of this channel, with the asset holding above it so far today. So decisive boost, breaking outside the downwards channel, breaking the 50-day exponential moving average as well, holding significantly the hold that you can see above the upper channel, right? 1, 2, 3 consecutive doji candles. Yes, they are doji, they are sideways, but the fact that they managed to hold gains outside above the channel, followed by this key swing higher yesterday, it's changing the outlook, at least for the near term, for gold, guys. Okay, so yeah, the outlook is, as we can see, is slowly changing. So from a technical perspective, it was the break of the channel and the 50-day moving average, along with the boost higher yesterday. It is of 50% Fibonacci level as well. And also the momentum, as you can see, the sentiment is changing as well. MACD has turned negative, even though the signal line is still below zero. So in order to confirm this rally or the continuation of this rally, we need to see the signal line extending further to the upside. RSI above 50 and it's actually providing higher lows, something that suggests that still bulls control the gold over here. With these swing lowers, these pullback lowers, be some kind of intraday correction or pullbacks. Okay, so this is from the technical perspective. So please keep monitoring this double fractal, this confluence of double fractal and 50% moving average resistance, because a break of it could suggest the continuation of the uptrend, with the next area to be seen, the next resistance area at 2009, or even the resistance I have been seen back in April around 2046. Okay, this could open the doors back to 2023 highs. Now, done with the technicals. Okay, now regards to the fundamentals, remember that I've said about the dollar decline due to the conviction that the Fed is approaching peak rates. Okay, I said about the data that they are halting, they are pressuring the dollar again due to the central banks. But also don't forget that so far and always, I mean, gold, other than a safe haven, is also a tool for hedging inflation. Okay, don't forget that. So still in focus, and actually what we can derive from this chart is that the gold sentiment has changed from a negative into a positive one. Intraday. Sorry. Intraday. Let me put the send 5 and 9. A pullback, but my dear friend who asked about gold, it was Shane. It is a pullback so far, but can you see it's still above the pivot point of the day? So it's a limited pullback. It is still indicating to a correction of the yesterday's rally that reached overbought territories. So it's a correction. If this floor sustains so far today, that will be just another indication that the bulls are in control, and we might see the asset extending higher once again. As John, my stochastic indicator is 533. The sentence is 533 only because I use it for 1 hour chart and 30 minutes chart, or even sometimes, depending on the asset, for 15 minutes chart. So this is my short term stochastics settings. Okay, 533. 533. Okay, only because I'm using it in the short-term setup that I have. So 1 hour, even 30 minutes, sometimes depends on the asset, for 15 minutes as well. Okay, but always Make sure that it makes sense to you and that it satisfies your asset as well. Okay, let's move on. Another quick question, how do you use divergence in relation between dollar index and euro dollar? Very good question, John. Very good question. So actually, let me just let me just check what's the day's correlation. Come on, come on, come on, come on, come on. Sorry, my connection is a bit slow. So dollar. Let me add my dollar index as well. We add it. Perfect. Save. So, dollar and euro. Where is the euro? It's my euro dollar. Yeah. So today, job. The correlation between euro dollar, and dollar index intraday is 99% negative correlation. So, okay, I don't get whether you're referring to intraday or not. But yeah, guys, a nice material that is included in our premium traders tools. In the meantime, I'm suspecting that jobs question is about divergence on yield differentials mainly. Okay, yield differentials mainly. So we are standing, my dear friend. Okay, I'm gonna leave it over here. But my dear friend Job, you asked about divergence in relation between dollar index and euro dollar. A quick reminder that the Fed is currently standing at 5.25 points interest rate hikes, okay? And it's expected next week to move up to 550, right? Okay, that's Fed. Fed at 550. And ECB is at 4 and is expected to increase next week at 425. So yield differential, so the interest rate differential between the two central banks are nearly, not nearly, they are currently 1.25 points, and next week that relationship will be sustained. It's expected that it will be sustained, right? So that, okay, consider the yield differentials between the policy deviation, the interest rates deviation, etc. That implies that that implies that theoretically dollar should be more attractive than euro, right? Because it provides higher returns. Okay, but remember what I initially said. Markets are ahead of themselves, right? Job, are you with me? Remember that markets are ahead of themselves. So this deviation has already priced in. The 4% and the 4.25 from ECB or the 550 from the FOMC has already been priced in. Now the markets are really discounting a dollar because they are discounting both, but yes, dollar. But due to the U.S. data and the and the data that we have seen from US mainly. US was the one that for 3 weeks in a row, it keeps posting more than 3 weeks. It keeps releasing reports that are signaling the pause of interest rates. So in US, things are a bit clearer and based also on the Fed speeches, right? A bit more clear that they will pause, that this will be the last one, in contrast with Europe. Okay, you can say Europe, the ECB clearly said that they are at the peak, but data haven't really followed as clear as in US. But nonetheless, guys, nonetheless, oh, okay. Do you agree, by the way, Job? So, yeah. What else? I wanted to add something about euro dollar, but now I'm a bit, I'm a bit, I blacked out. Literally blacked out. Oh, Marco has shared something in Skype. Let me.
This is not only negative years. This is overall since 1960. Results group by month, dollar index. I listened to a question before.
So he heard your question and he put, okay, I could share that actually. I could share that. Average monthly percentage of dollar. This is current one, right? Since 1960. The chart is since 1960, right?
Yes.
So
it's wrong, of course. Where 0.045% is 4.5%.
5%. So there's okay. I'm a bit confused right now. So this is a chart back in 1960s or since 1960s, and the tendency of dollar being higher in August. This is what you're.
In August, on average,
is 0.1.
It has gained 1%.
One.
Since 1960.
Since 1960. Okay. So So Job, you can see that they were January and May, for example, they tend to be more traditionally bullish months for dollar rather than August. And then August and November. Just for your own information, guys, just to keep an eye on. Yes. So in regards to your very, very good question about divergence, I answer a part of it. The second part, just to fully cover my reply, is remember the last this week mainly, but in general, we have seen that other than the concerns that aggressive tightening moves will hurt the global economy, is also the decline in the safe haven demand of dollar, which has pushed higher all the dollar crosses and has pressured significantly the euro. We have seen commodities benefiting, oil, gold, dollar yen as well. These traditional safe havens have benefited on some safe haven demand, while dollar has we have seen some cash flows out of dollar, of safety of dollar, but into the gold and oil lately. Okay, so cable, big sell-off. This is the day's candle. I think you already know the reason. If you have if you have been you have started since the European Open, you know the reason of this big sell-off, and I'm referring, of course, to the U.S. inflation, uh, which detected more than expected, accelerated more than expected. So um, um, this and the headline that for the very first time, um, more than a year now, has been below 8%, sorry. It was a positive a surprise. It is a positive surprise for UK economy, okay? Um, so that we could say that yes, this is that definitely should have uh, helped pound, but this is also um, this is putting less push, let's say, pressure for the Bank of England, okay? This did push some, like, relieves a bit the Bank of England. However, it's just a single reading, okay? Single reading, which cannot take off the table the 50 points, rate hike from the Bank of England, okay? So the UK economy, it might be, if I'm not mistaken, I'm not sure about it, but I think it's the very first time that we have a clear big deceleration in inflation or any data that implies to that perspective. So it was a pretty unexpected fall, but without a lot of data backing significantly that inflation indeed from now onwards will cool down, and etc. So it is the biggest, definitely the biggest loser so far today, okay? Because obviously after the inflation pulling back to below 8%, of course now the markets are really scaling back the expectations of another 50 points hike from the Bank of England. However, actually, from the Bank of England to take off the table the next rate hike is still quite unlikely. Okay, still the based on the data, excluding this latest inflation reading today, still at least another 25 point hikes from the Bank of England is on the cards. Okay, we're still having GDP numbers confirming a growth, but we still have a very key barrier for the UK economy to be the labour market and the housing market. Housing market is struggling significantly, okay? Significantly. So we need more evidence. That's why the another 25 points are still on the cards from Bank of England. That's why we have seen this big sell-off today from the pound, okay? We need more. We need to see more. Bank of England is still data dependent, okay? But regardless of the inflation data today was a single release. We need to see more in order to convince that Bank of England could stop. Okay, so yeah, so 128.96, the bottom of the day, and also the support of the day. As you can see, it was a sharp sell off the last 4 days in a row, reverting more than 35%. Yeah, more than 38% of the latest swing high that we have seen. Still, key support remains the 20-day moving average. Also, you see, nicely confirms also this latest swing high back in June. So 128.30 remains the key support level for cable. However, momentum is still positive, but RSI is close to 50, pointing lower. Let me put my daily chart on, guys. Sorry, just a second. Let me just review a bit what's going on. So momentum is well above, still well above zero. And if I connect also my lows, you can see that there is still, actually no, the good is, yeah, here it is connecting there. So you see it is still above, at least still in an upwards trajectory. If I connect the also MACD still rising, so there's no divergence or something, at least in the medium or long term. Okay, so we need to keep an eye on 128.30, and the very next one will be whether it will break this trend line that I have just set, because a move below 20-day moving average, and more precisely a break to the downside of the trending of the trend line seen since the end of May could imply to a potential reversal of the overall outlook for cable. For the time being, for the time being overall, by saying overall, I'm referring to the medium and long term outlook remains positive. So keep an eye on 120.30 and 128.30 and 127.50 territory. Just one more thing. Let's go intraday. Sell-off continues. Bears are in control. You can see, actually, you could have seen how sharp this rally is. Let me just blank. Come on. So you can see how sharp sell-off, the sharp sell-off that we have seen since yesterday, and oversold outside Bollingers. MACD is keep extending lower, RSI below 30, no indication for a cross above 30 yet. Let me put this just what to say. Okay, down, below 129, moving average I keep pointing lower. Stochastic still pointing lower, so still sellers are in control, guys. So because, however, we are already in an oversold intraday bias, we might see the asset consolidating around 129 before his next clear move. So consolidation might seen around 129, but still sellers are in control. So the next support level, immediate support level for cable should be the 128.40 territory. But let me be precise. according to ATR, we have not 26. So let me do a bit of math. Currently at 129.11 minus 0.263. So 128.80. 128.58 is the next support level. 58 based on our ATR in the 1 hour chart. Okay, and further decline below that level could bring back to the attention the level that I previously said, that 128.30, which is also, come on, up here it is. So this is the next support levels to be seen. If the asset exits this short-term consolidation or short-term, like you see, is trying to correct, decide to after this oversold situation, is trying to sidelines, actually is consolidating at 129, but a break and a move further below 129 could found some immediate support levels at 128.56 and 128.30, with 128.30 to be also the 20-day moving average as well. So intraday, for everyone that is interested in a very, very short time frame, please keep an eye on a resumption of this decline. Okay, so a resumption of this decline could open the doors to these next immediate support levels. Euro Oz. For euro dollar, I'm not sure whether anyone asked, but the next resistance area, guys, could be seen back to where? To 114 and 114.50 territory is taking us back to December 2021 lows. That's in the next key level, resistance level. If we see the euro dollar advancing further ahead of next week's events. For 4 days in a row, it has been to the sideways, doji candles, correcting after these 2 days of overbought extreme condition. Momentum is positive, RSA holding above 70, so still on the dollar weakness, euro dollar is advancing. So that's pretty much it for euro dollar. So on the break of our latest high at 112.80, the doors could open up to 114 territory. On the flip side, a move below 10-day moving average, or more precisely this triple fractal at 111, break of 111 could signal the end of this rally and could signal some kind of a reversal. But yeah, still this is very, very unlikely for the time being. So you said Euro Oz. Okay. 1, 2, 3, 4 days to the upside, already broken May's and June's peak, extended above May's and June's peak today. Rising momentum, RSI keep rising. Let me put my charts. Actually, blank template. MACD rising candles. You can see how big these candles are. Bullish cross between the 20 and 50-day moving average, 50 period moving average. Broken, as I said, March. This is the line that I have just put on is March and June, so 2 months resistance. It was already broken today, closed well above it. Okay, momentum is rising, RSI is rising. So we might see a bit of a correction, but bulls are in control. The gap between the moving average is growing. So, okay, obviously we need to wait for the day's candle to close just to make sure that this break will be sustained. But yeah, a closure above tonight, above the 125.40 could open the doors to April's top. Intraday, my dear friend, sideways, sideways, side, boom, retested, corrected a bit, swing higher again, corrected a bit, but holding this floor for 1, 2, 3 hours in a row. Momentum is still positive. Let me use my intraday setup. Yeah. So can you see this is very interesting as well? You see stochastic. Higher bottoms, higher bottoms, higher bottoms, swing slightly lower, swing away, so pull back from 80 territory, it crossed lower, but still very, very close to the overbought territory, so still supported, so indicating that bulls are in control and this swing lower is limited. So yeah, positive outlook intraday and in the medium term for Euro Oz as well. Hello from Indonesia. We have covered Euro Aussie. Let's move on to Euro Yen. And if there are no further questions, I'm gonna call it a date afterwards, guys. So this is the call for anything that you want to discuss. If there's anything that I have missed, please let me know, because as far as I can see, I have replied to all the questions so far. So Euro dollar, Euro yen. Yes, Euro yen. Sorry, I'm running out of steam a bit. So yeah. So Euro yen over here. It has broken the key 157 territory today. Actually, I would like, just let me clear a bit this mess. Okay, so we have seen something that I haven't covered at all. It was yen. I have mentioned this, the dollar yen, that is has been one of the biggest beneficiaries along with gold and oil this week. But I didn't mention what's going on with the Bank of Japan. We had some news overnight with Mr. Ueda once again confirming that the accommodative policy will remain in place, okay, until there is a fundamental shift in the central bank's assessment of the inflation. So these comments, they pretty much confirm what he said in the ECB conference 2 weeks ago, okay, 2-3 weeks ago. So it's pushing back, okay, any speculations that there will be a tweak in its policy setting uh, within the year. Okay, so that's also responsible for yen weakness against nearly all the major currencies. Okay, it's this shift from Mr. Weather that, you know what? No, we're not changing anything. We'll remain ultra accommodative with interest rates low, negative actually, and yeah, nothing is changing. And also, it's all about deviation. Let's not forget the yields differentials, like Joe mentioned earlier. So, Bank of Japan has interest rate negative 0.10. Euro has 4%. This is a clear. This explains very clearly this rally that we have seen since 2020, or even if I focus on the last since last year again. The ability of yen, as I said, having this swing of risk sensitive assets, etc., brings some swings lower, along with the weakness of the EU economy. But yield differentials, after all, will help you to clear a bit on your heads the long term trends. But yes, guys, responsible for this intraday short-term boost up to 157.19 is Mr. Weather, and its comment once again, its assurance once again that they're not changing anything. They are remaining into ultra accommodative policy. Bank of Japan is not ready to change anything. So that, in combination with the Eurozone inflation reading from June, it was the final one, so it didn't really affect the market, but confirmed that we have a bit of a slowdown. That was responsible for this rally. Now, for the time being, pull back, but as you can see, okay, 1, 2, 3 hours to the downside, but the moving average are flattened. MACD is still positive. RSI is close to 61 flat, and the only one that is pointing lower is stochastic. So there is a mixed momentum over here. The only one that it suggests a reversal is stochastic. All the rest, they are positive. And positive to flat. The moving average, for example, is pointing on the right hand side, something that indicates consolidation. So, for my friends, for my scalper friends over here, so this looks to be, for the time being, a correction. As long as the asset doesn't break this 10 period moving average coinciding with the 23.6 Fibonacci level, then this is just a correction. Okay, so if this breaks the first resistance, which is also very close to 38.2 Fibonacci level and 20 period moving average, will be the next floor for euro yen. But we need to see at the top of the hour whether this candle will close below the 56.65. On the flip side, support over here, if the asset is supported over here, and a move back above 57 could open the doors to 57, 157.65, or even the upper Bollinger Band and the June's peak at 158 or even 158.40. Okay, so keep an eye on the 158 and 40 are the next resistance areas, the next level to be seen to the upside if the asset sustains today's, actually the whole week's gains, and if it presents a sign of a resumption of the uptrend. 156.65 was already broken just now. Let me zoom into the 30 minutes chart. Okay, there is some pullback, so it might find some floor at 56.35 for the time being. So down, the moving average are ready to bearishly cross. So yeah, there is some pressure ahead of the US Open. So yeah, it might find some floor at 156.35. But as I said, overall the outlook is not changing for the time being. So that might be a decisive correction. What else? If you're using ATR, Christopher, you can use it. You can use ATR for spotting target and support levels. You can double it to find your next target area, and you can use it as such, not double it as such, for stop loss, or even half of it as stop loss. Depends on the asset, depends on your risk and reward ratio. But if you're trying to use ATR as for finding daily target, usually should be twice the ATR. And if you're using multiple targets, you can use 3 times the ATR as well. But this is far away, so yeah, usually is twice the ATR. Depends on your risk and reward ratio though, okay? So calculate your risk and reward ratio by doubling ATR before you actually use ATR, twice the ATR as your, twice or 3 times the ATR as your target area. Yes, you can use it for target 1 and target 2. Yes, please have a look on our targets webinar or ATR webinar, and I'm presenting over there multiple ways on how to use ATR for your stop loss and target area and targets. Okay, guys, if there are no further questions, I'm gonna call it a day. I'm a bit tired. Okay, Swiss yen. Again, guys, the picture is not really changing for yen. Yen is the biggest loser this year. So the biggest loser, sorry. Yes, the biggest loser. I had nearly all the major indices, all the major currencies. Swiss yen has been in a strong rally, clear uptrend since February. Their surge. You can see that this is a weekly chart, by the way. You can see that it was a bit sideways the last 3 weeks, but it managed to break this week the 3 weeks peak, resuming its uptrend. So the very next area to the upside, resistance area for Swiss yen is at 65, 165.20, 165. Let's round it up. So very strong trend. We had seen some corrections. Yes, indeed. In June, it was a bit of a correction, but a nice resumption, strong resumption of the trend, well supported by the 20-day moving average, well supported by the 50-day moving average. Nice rally momentum. It was seen a bit of a lower in June, but still, but started rising higher once again. RSI above 70. What can I say? It's yeah, So 163 was breached today. So next levels, these key levels, if we consider the bullish bias by MACD, the bullish bias by RSI, the bullish bias the bullish signal indicated by the breakout of June's peak, they think that um, the asset remains well supported with 164 and 165, the next resistance levels. Any swing lower, it looks to be a correction intraday or limited swing lower for that particular asset. So 1 hour chart, a bit of a pullback, doji at the resistance level. So it break to close above resistance level for 3 hours in a row. Lower right now, but still holding above the first resistance of the day. But you can see MACD is well above zero, rising. So these swings look like limited pullbacks, guys. You can still trade them if you want to, but they are short-term pullbacks, limited pullbacks. Okay, so I will call it a day. Thank you very much for attending. Take care. Just a quick reminder that today, oh, okay, the housing, okay, sorry, I forgot to mention the housing starts that they were released 2 minutes ago. What's going on? So building permits decline, revised up, however. So missed expectations, so below expectation, building permits for June. Housing starts also lower than expected. There's a contraction in the housing starts change by 8% contraction in June. So what that means, it means that this is tracking how many new single family homes or buildings were constructed. So the contraction, the drop by 8% presents that this is a hit on the housing sector in the US as well. Yeah, hit in the housing sector in US as well, with a contraction at 8% on the housing start change. Sorry, let me just see whether we have a breakdown of the report already. So very similar pattern, guys, everywhere in Europe, in US, in UK. So what matters is not the pattern, because it looks like the same for all of them. Tight labor market, industrial sector struggles, housing market struggles, tight labor market, inflation is cooling down, but is still at high territory. Same pattern everywhere, but what matters is how hard each of these economies will be hit. Nonetheless, let me see whether there is anything else that I'm missing out other than the earnings. I will remind you about the earnings. So fairly light. No, actually, there's nothing else. Quick reminder that we have earnings. So I'm not sure whether it's after market close or before close, but today we had already seen ASML and Goldman Sachs, and we are waiting for Tesla and Netflix. hopefully I didn't miss them. I think they haven't released yet. Yeah, Tesla and Netflix and IBM, another very important, another very important company. For tomorrow we have Johnson & Johnson, and Friday the key company release will be the American Express. And just a reminder for the upcoming week, we have the big tech giants, Amazon, Microsoft, Apple, Meta as well, okay? Okay, so I'm gonna call it a day. Take care. It's a very light economic calendar today because the majority is already out. The only thing pending is the oil stock, EIA oil stock, with oil being on a rally, supported this week. Back to retest the 60, the 76.50 or even the 77 level. So keep an eye on that. Momentum is positive due to the Chinese demand concerns and etc. So gold supported, oil supported, dollar remains to the downside with some intraday limited boost. All the rest are well supported due to the dollar weakness, except from cable, stocks in a rally, a global equity market in a rally. Some sideways movement today, of course, but it might be ahead of the Netflix and Tesla as well, and ahead of the US Open. Okay, let's not forget that. But this is pretty much it, guys. I'm gonna call it a day. I can see that there are no further questions. So have a great day ahead. Take care, and I'll see you again next week. Thank you. Bye bye.